Okay. Hello, everyone, and welcome to today's SCORE Fairfield County's live webinar on what legal business questions would you like to ask a lawyer or CPA? I'm Alan Rosenberg, the webinar coordinator and a business mentor here at SCORE Fairfield County. I'll be your host. Our presenters today are Ron Bellenot, Ed Kelleher, and Janice Butler. More on our speakers in a minute. This SCORE webinar is being done in collaboration with the Monroe Chamber of Commerce and Monroe Library. Beth Stoller, representing the Chamber of Commerce, is going to say a few words. Hi, Beth.
Hi, everybody. Thank you, everybody, for joining us. I'd like to thank SCORE and the Monroe Library, the Edith Wheeler Library. We have been doing cooperative lunch and learns and occasionally an evening event for the last 3 or 4 years. We have brought together many topics over the years, such as branding and video marketing, mindset topics, goal setting topics. We've had a wonderful array of speakers that have brought a lot of great information to everybody. This is something that, even though the pandemic is here, we are going to be continuing into 2021. So I want to thank everybody for coming. We do have another webinar coming up, one more for this year on Wednesday, December 16th. And our speaker is going to be John Barb, talking about do what works and get unstuck from your biggest business problem. So stay alert, keep looking for the emails and the newsletters that come out. And thank you very much. I know that you're going to get a great deal out of today's presentation. Thanks, everybody.
Thank you, Beth. So now I'd like to give you some brief information on SCORE. SCORE nationally has 320 offices with over 11,000 volunteers. Started in the mid-60s as part of the SBA. At SCORE Fairfield County, we have 130 plus volunteers with a wide range of industry process and subject matter expertise. We offer 3 primary value-added services to small business owners. Free one-on-one counseling, which can be done face-to-face, telephone, email, or video, which all can be accessed via the Request a Mentor link on our SCORE website. And please note that we are currently, due to the what is going on health-wise, we're not doing face-to-face mentoring. All mentoring is being done via Zoom. The second thing we do are educational workshops and webinars, as we're doing today, and we produce over 150 per year. And then we have extensive resources on our website, including a network of subject matter experts at your disposal. We're in the process of converting some of our canceled in-person workshops to live webinars due to the national health crisis. So please look for the specifics on our website, fairfieldcounty.score.org, for more information. Some useful information about today's event. We've set aside time for questions and answers at the end of the presentation. If you have a question, please use the chat window at any time during the presentation. It's located as part of your screen. Our webinar will end sharply at 1 p.m. to respect your time. The session is being recorded, and a link to the recording will be available at fairfieldcounty.score.org within the next couple of days. Now, some information background on our speakers. Ron Bellenot has been practicing law in Connecticut for more than 30 years, the last 26 years with his partner, Kathy Buford. He became a founding partner of the law firm, Bellenot and Buford, LLC, after graduating from Quinnipiac University School of Law in 1989. Ron has extensive experience working with small business owners, helping them properly structure their business activities to accommodate and protect their personal and family assets. Attorney Ed Kelleher has over 28 years in private law practice, representing individuals and clients in diverse businesses in a wide range of legal matters, including wills, trusts, probate, residential and commercial real estate transactions, and related litigation, business formation, and business law. Janice Butler is a certified public accountant and certified internal auditor and the owner of Janice Butler CPA, providing individual and business accounting and tax preparation services. With over 21 years of accounting experience, Janice has worked in the Big Four accounting firms, corporate accounting, and taught at local colleges and universities. Janice earned a postgraduate certificate of taxation from the University of Hartford and an MBA from Quinnipiac College and a BS degree in accounting. So now I'd like to turn it over to Ron. Ron, it's all yours.
Very much. Good afternoon, everybody. There's a lot of information to cover. We're not going to have enough time to cover all of it, but we do have resource materials that if you contact one of the three presenters today, we can try and email that information to you so you can have more detailed information about the different areas that are listed on this business checklist. There's a lot to go through. We also will try to answer all your questions, but depending on how many they are, if we run out of time here today, feel free to email or contact any of the three panelists here, and we'll try to answer them at some time after this meeting, because it's important that you do get the answers to your specific questions. Ed Kelleher is going to start today, and he's going to talk to us about business structure.
Good afternoon. Thanks, Ron. Good afternoon, everybody. Thanks for being here. I'm going to basically just cover the almost a fundamental decision on what form of business you want to use as you move forward. A lot of times people, I saw one person had already put up a question that they started as a sole proprietor, and I think of moving to an LLC. The big decision you need to make is the factors of administrative complexity, and that's kind of weighed against the need for protection from liability. As a sole proprietor, you do business under your own name. You may file something with the town clerk called a trade name certificate saying, I'm, Ed Kelleher doing business as Busy Bee Attorneys or something like that. And, but that doesn't give you any protection whatsoever from your creditors. If you have a claim against you as a result of your business, you and your assets are completely exposed. So the really kind of the primary thing that we try to do, and it's different for every kind of business that you have, but it's really kind of a first step, is talk about whether you want to be a limited liability company or a corporation or S Corp. Not going to talk about partnerships too much because I frankly see very little advantage to having a partnership that's not part of an LLC, because it just is, it gives you so little, as a straight partnership, gives you so little protection from third-party liability. So with a limited liability corporation, up until really almost about 20 years ago, maybe a little longer, it really wasn't an option. It wasn't a real viable option. It had presented complications tax-wise and otherwise, but since has become much easier to use. A limited liability corporation is something you can set up as a single member LLC, or you can set it up with others. And it's similar to a corporation in that each person who is a member owns a share in the business. Still same concepts of majority interest, might have greater control. You can set up an LLC as member managed or manager managed. If it's member managed, then each of the members is the person who has the ability to bind the company to a contract, for instance, each one of those acting individually. If it's manager managed, then the members own the equity in the business, but they've appointed someone else to be their manager. And so the manager, under those circumstances, the manager is the person who has the right and the ability to bind the business with contracts and things like that and their actions. Corporations have a, kind of a similar setup, except the corporation is managed by its officers and it's overseen by a board of directors. And this is where kind of the level of complexity comes in. Corporation is more complex. You're required to have annual meetings. You have a board of directors that need to be elected. And in the statutes, it really is just a level of complexity that's more appropriate to a bigger business. That's not to say an LLC can't be a big business, but a corporation is the traditional form of business. It is more expensive to operate. It's more expensive to set up, and the annual reporting, the annual fees are higher. Honestly, I think it's a more cumbersome way for someone just starting out to do business. That's why I typically recommend limited liability companies. Everyone's situation is different. The nature of your business, the nature of the name of the people involved are different. What their goals are, if it's more than one person coming into the business, when they want to be able to get out of the business and get their money out of the business, the type of entity that they're managing, whether it's a restaurant, for instance, that hopefully will have a relatively long term, or if it's just an investment in a single piece of real estate. Real estate's actually a classic example of why you would want an LLC. You want the real estate to be owned by the LLC in order to protect the members of the LLC from liability associated with a tenant fall or something like that, or a tenant claim. The LLC is very effective at that. If you're a single member LLC, which I suspect many of you may be, you can set up basically, it's a pass-through entity. So your tax returns are relatively simple, assuming you're not filing your taxes as a corporation, which I think Janice can address. That's more of a tax issue. But the LLC it really is a shield primarily for the single member person. It's essentially a sole proprietor doing business, but they have a shield from liability. It's very important if you do set up that way to manage your business properly in terms of maintaining separate bank accounts. And I think Ron and Janice may get to this in more detail, but you do have to be very mindful of the fact that your LLC is a separate legal entity. It is not you. And you can't use its money without going through the proper channels, and you have to treat its creditors right. The beauty of the LLC is honestly, in my opinion, the simplicity. It's less expensive to set up. It's less expensive to operate. One of the things and I'll be closing in just a minute, but one of the things that really not everybody really keeps in mind, and I'll touch on it here because I do a fair amount of business succession planning, is the fact that everyone who does set up a business, especially if they build equity in that business, and if they have a partner in that business, they need to have an exit plan. They need to have something in their estate plan that will allow them to transfer their membership interest to a successor. Now, this can be done a number of ways. You can have a buy-sell agreement with a partner. You can, if it's a single member LLC, you can actually transfer your membership interest outside of probate by filing with the with the LLC and the LLC papers. Something I can prepare for you. It's a little known option for people, but it is something that is an option. Everyone needs to have a will, needs to have a power of attorney. I mean, you can imagine if you're a single member LLC and you become disabled, something like that, and if you don't have a power of attorney, no one can run your business or have any authority to do anything with your business without having your authority under a power of attorney. So those are critical things to have. I recommend all LLCs, whether they're single member or multi-member LLCs, have an operating agreement. If it's a multi-member LLC, it really is imperative. Single member LLCs, you think, well, what's the point of having an agreement with myself? It provides the means for you to handle succession in the event of your death or disability better, and it gives you the opportunity to get better protection from creditors with provisions you can make in the operating agreement. I think my time is up. So Ron, I will pass on to you. Ron Bellenot.
Thank you very much, Ed. I appreciate that. And again, there's a lot more information. If you need, you can contact any of the panelists. And I already see one question here that asks if the slides will be available. We have a detailed list of the slides and whatnot. If you contact us, we can forward that to you also. I'd like to talk to you about opening and maintaining a small business today. The checklist that I have, it was on the prior screen. We don't have to go back to it though. Lists a lot of information that needs to be considered when opening a business and maintaining a business. There's not near enough time here today to cover all of that. So what I'm going to try to do is a hypothetical case study of opening a business. And hopefully that'll incorporate some of those areas that we need to talk about. And it'll give you an idea of the process that you should go through when opening a business. Before I get started on that, though, I'd like to give a couple of statistics. The U.S. Bureau of Labor and Statistics shows that 20% of new businesses fail in the first 2 years. Most people think it's more than that. But 45%, almost half of the new businesses fail in the first 5 years. And please understand that these businesses are probably not making a profit. They're probably not taking income to themselves during this 3 to 5 year period. Or 2 to 5 year period, excuse me. Because if they were, they probably wouldn't close down in 2 to 5 years. So you want to make sure that you're set up correctly and you don't become one of those statistics. Also, it takes at least 2 to 3 years and sometimes longer before a business becomes profitable, at least on average. So what does it take to make sure that you're not going to be one of these statistics that fails in the first 2 to 5 years? One is I suggest that everybody surround themselves with professionals. Get yourself a good team of professionals. They don't have to be on staff and paid salaries, but at least consult with professionals, be it attorneys or business consultants, accountants. You have organizations like SCORE and the Chambers of Commerce that can help you figure this out and help you brainstorm this, because that's what I'm going to be doing today. I'm going to be brainstorming the opening of a small business to see if it should be opened, if it's feasible, is it viable? And when you consult with them also, it keeps the emotion out of some of the decisions, because entrepreneurs get really excited. They get this business idea. You want to open your business. And a lot of that's driven by emotion. Having somebody with you to make sure that you're not making business decisions based only on emotion, it will be very helpful to seeing that it succeeds. You want to do a lot of research and educate yourself. Knowledge is everything. The other reason you get in touch with the professionals and other people, other business people who've been through this before, is because none of us are experts on everything. And none of us knows what we don't know. If you don't know what you don't know, there is somebody that probably does know what you need to know. And they'll be help educate you so you do know the things that you need to know. And you'll kind of see where I'm getting at here in just a second. So let's do the hypothetical of opening a bookstore, okay? If you want to open a bookstore, I'm going to kind of talk on some of the issues that you need to discuss with yourself and with the people around you. Now, this process is probably the same for just about every business. Maybe some things apply a little more others than not. Hypotheticals can determine feasible and they're actually succeeding is viable. First, we'll look at monthly expenses. If you're going to open a bookstore and it's going to be a brick and mortar bookstore, you're going to have to pay rent. You're going to have to pay utilities. You're going to have Wi-Fi for a number of reasons, but you're going to need to operate a point of service cash register or some kind of system like that because people want to pay by credit cards and debit cards. And that runs off of Wi-Fi and that has a fee to it. You're going to need to pay insurance, merchant service fees for those credit cards and debit cards that people pay you with. Security system is a good idea, and that has a monthly fee to it. You're going to need to advertise so people know who you are, where you are, how to find you, what you're offering to them, office supplies. And I won't even consider salaries or for the minute because maybe you can start this off on your own until the business is making enough to cover the cost of the employee. Well, what does that cost? In Fairfield, it probably costs quite a bit. I'm going to use a very low number of what I think is a low number of $3,000 to cover all of those expenses. It's probably going to cost more than that, but let's just use that as a base to start with. How many books do you have to sell to break even, to pay those expenses need to be open month after month? Research and selling a book has about a 40% profit margin. So if you sold for $20, you're going to have an $8 profit on that sale. You would need to sell 375 books in order to net the $3,000 to break even. Breaking even, you haven't taken a salary or anything. So you're going to need to do that. Maybe you don't need to earn to get by the first 2 to 3 before it becomes profitable. But the median for a family or for a one-person family in Fairfield County is $5,700 a month. So at $8 a book, you'd need to sell an additional 712 books for a total of 1,087 books to pay the business costs, expenses, and to, maintain your personal household. If you have a family of 4, the state median income is $10,782. That equates to $8 at $8 a book, that's an additional 1,347 books that you would need to sell in addition to the 375. So you'd have to sell 1,722 books. Is that feasible? So now you have to take a look and see, what are my competition? What's my local competition first? Everything from a drugstore to the big chain, the big box retailers. Your biggest competition is probably going to be Amazon, though they seem to be everybody's biggest competition. But they are going to be your biggest competition. So how can you compete with that? If you don't think it's feasible, then that's fine. Is there another alternative? Can you still open a bookstore or sell books and be in that industry if it's not feasible to sell that many books and maintain a salary and the cost of operating that brick and mortar store? And if it is feasible, that's great. You can go ahead to opening day, but you probably shouldn't yet. You probably should consider what the other alternatives are anyway, even if you think you can sell 1,700+ books a month. Maybe you do an online bookstore. Okay, this is where a web designer, and a lot of web designers also have good marketing backgrounds and experience, where they can help. They can help set you up with a great web page and get you set up on the various Facebook and Twitter and Instagram and YouTube. And that's going to probably cost you less than fitting out, having builders and people come in to make sure it looks good and invite from your store. So you might have money there also. And that web designer and that marketing to help keep you relevant and viable, and your web page showing up when people are searching for books, that's probably a lot less expensive, I'm pretty sure it is, than the rent and the utilities and the overhead that it takes to run the brick and mortar store. So maybe that's a possibility, even if you think you can do it with the brick and mortar store. and they'll help you stay relevant online on all of those various online platforms. But can you still compete with Amazon? Because that's kind of what they are. They're a big online store, and they sell books. They sell ebooks and Kindle and all of that. So can you compete with them? Well, the marketing person will help your web presence and social media presence stay relevant. But maybe there's something you can offer that those stores can't offer. Maybe you can do an online book club. A few of them, an online book club for children, an online book club for teens, an online book club for young adults and for adults. And that keeps you, and if you do it weekly or semi-weekly or something, you're encouraging people to stay in touch with you. They're going to keep remembering who you are and where you are and what you offer. And they're going to be comfortable with you. And they're probably going to want to do business with you. Amazon can't offer that, nor can Walmart online offer that. They're not offering it if they could. You could do a Saturday morning book reading for children. Do book readings on YouTube that you can share and post on your Facebook page, and don't forget LinkedIn is another place that you'd want to probably be. Have conversations, record conversations and interviews with local authors or teachers and others. And that may help you to be relevant and to compete with some of the bigger stores, maybe at the level that you need to live, have a comfortable living. You want to keep visible on all those mediums. You want to offer services that the others can't. But what you want to do is you really need to do a proper analysis, a proper brainstorming. There's a lot more to it than this. And my time's running a little bit short here, or I go into what all these other issues are. But you need to brainstorm that with people who have the experience, have the knowledge, and are able to help you to make these decisions. SCORE is a great place where you can talk to people about this. The chamber has resources that can help you. You can go to, the private professionals, be it accountants and attorneys or others like that. But do it because you don't want to get into something and find out that it's going to fail. Another reason you might want to consider in this particular scenario, why you brainstorm, doing an online bookstore or trying to have an e-presence is because books, there's still a lot of people who love that hard copy book, but they are going to digital. There are a lot of ebooks. And even just look at the newspapers, the local newspapers, how thin they're getting, even the Sunday papers. And to give you, and if you go online, maybe you can shift with that technology change and find a way to work with digital books. Because if anybody remembers, there used to be a thing called record stores, and then those turned into CD stores, and they're no longer around. And people may remember Blockbuster and all the little video rental stores that were in every strip mall. Technology kind of took away from those. So you want to factor technology. And so even if you can make it over the next 5 years, will the industry change, and do you need to be up on top of that? These are the things that you need to be prepared for so you don't fail in 2 to 5 years. And there's a lot more. I'm sorry that I am out of time now, though. So I'm going to turn it over to Janice. And this is very important. So please pay attention here. These tax issues are critical.
Thank you, Ron. And welcome to all of you for being on this webinar. One of the things as far as when it comes to taxes, if you are sole proprietorship, what happens is your business gets filed as part of your personal tax return on a Schedule C. Now, if you're a single member LLC, you're also going to file your tax return on Schedule C as part of your individual tax return. Now, we did have a question. Somebody wanted to know if they were a single member LLC, can they still file jointly with their husband? Yes, you can, because for tax purposes, a sole proprietorship and a single member LLC file the same way on Schedule C. If you are an LLC with more than one member, sometimes what people will do is they'll put their husband and wife. So on when they file as an LLC with the state, so that it does show there's 2 owners. In that case, the LLC would file a separate tax return which is a Form 1065, then any of the owners would each get a K1 that is then used to prepare your individual taxes. A partnership is the same way. It has its own tax return and each partner gets a K1. And corporations and S-corps also have their own tax returns. The difference is with the corporation, they will pay their own taxes versus your LLC, which gets paid by the individuals. So once your business is up and started, whether you're a sole proprietor or an LLC or a partnership, you may want to consider eventually estimated tax payments. One of the things I cannot stress enough is that once you have your business set up, you want a separate business bank account. The IRS is getting to the point that it's saying that if you don't have a separate bank account, you don't really have a business. It also keeps your personal assets separate from your business assets. For tracking expenses, getting a business credit card. One of the things people kind of don't think of is you need to have very good books and records. This was very evident during the pandemic because businesses that did have good books and records, it was very easy for them to apply for things like the Paycheck Protection Program. So you really want to start that from the beginning. There is different software. People are usually familiar with QuickBooks. Some people are old fashioned where they start out in Excel. It's going to depend on the number of transactions you have, the types of expenses. If you have a high dollar items, like if you're an artist and your work is more expensive and you don't have as many expenses, you might not have to use something like QuickBooks right yet. But if you're selling items, if you have multiple clients, you can track all that. One of the other things is, do you need an employer identification number? The employer identification number, you do apply for that through the IRS on their website, irs.gov. Now, what the IRS will say to you is that you would need the EIN number if you have employees. But if you are an LLC, a sole proprietor, if you do work, particularly if you're a consultant, you might get asked for your social security number, because if you are paid more than $600 from a business that you provided services, they might want to issue you a 1099. So although if you look at the requirements about the EIN number and you need to have employees, if you don't want to give out your social security number, I recommend getting the EIN number. Now, when you go to open up your business bank account, they're either going to want it in the EIN number, or you need to have gotten that trade name certificate that Ed mentioned at the beginning when you establish your business, which typically you can get through the town clerk's office. And that's for the sole proprietor. The EIN number could be for sole proprietor, LLC, corporation, any one of those. But you will either need the EIN number or the trade name certificate. With the trade name certificate to open the bank account, it would be in your social security number. One of the other things, which it is outlined in the slides, that the IRS has a 20-point checklist for independent contractors. What happens is people start a business, they need additional help, so they might have people work as independent contractors where they just pay them a sum of money. If you pay in cash and have no records, you can't deduct that. if you pay that person more than $600, you have to issue them a 1099. The IRS's thought is you're taking it as a deduction, so the other person is taking it as income. So what happens is, are these people really independent contractors or are they employees? Due to time constraints, we won't go through the 20 points. Again, you can contact one of us if you want more information. But there are 3 factors that really outline whether someone's an independent contractor or an employee. And what the IRS will look at is behavioral control. Do you make the hours? Do you, basically, how does the person work? Financial control. Are you the only business the person is working for? Do they have to buy their supplies? Do you provide the supplies? And another thing is the relationship of the parties. So it ends up where this also became a big issue because independent contractors in the past could not collect unemployment. But due to the pandemic and the CARES Act, they were able to collect unemployment. And this is where some employers got themselves in trouble because they found out that they were really employees. This also, there are very steep fines and penalties that you really would want to look at when you're doing this. Now, the other thing, the state of Connecticut does get even stricter about whether someone's an independent contractor or an employee. So if this is something where if you're in doubt, you definitely want to seek out professional help regarding how you should be classifying the individuals. We do have a question that there's a $250 fee for the EIN. Again, if you don't have employees, you do not need it. I just sometimes recommend it if you're like a consultant, or for instance, for myself, I get issued 1099s by businesses. Instead of giving out your social security number, you can give out the EIN number. It's just another way to security for yourself, because then you're not giving your customers or clients your social security number. So if you do have additional questions, we do have time where you could type them in the chat box and we will go through your questions. And this question might be more for Ed. What business structure is most friendly for attracting outside investors?
The best business structure for outside investors really would be a C corporation. So it's not an LLC or an S corporation. C corporation, you can set up various classes of stock. An investor would probably want to be in a preferred class of stock, so they could be treated from the rest of the shareholders, treated better, honestly, than the rest of the shareholders, and they have exit strategies built right into the agreement. Now, if your investors, so that would really be someone just who's in the business of investing. If you're talking about someone who's investing for purpose of actually getting into the business with you, really kind of in the nature of a partner, then that's different. If they want to get in and work with you and grow their business along with you and work in the business, then a multi-member LLC would be fine. But again, you still have actually, whenever you take on a partner of any kind, you have to have an exit strategy, and it has to be agreed on when, as I like to say, everybody's still in love at the beginning of the relationship. And so you're not trying to figure out an exit strategy when something has come up to, that somebody wants to leave. So to answer your question, the C Corp, generally speaking, but it all depends on the circumstances.
I see another question, the best form of insurance for an LLC doing management consulting. I guess it may depend on the kind. You're going to need to have a good insurance, and you should consult with the insurance, a good reliable insurance broker on that. But you'll need your regular liability insurances and then possibly an E&O policy, errors and omissions. It's kind of like a malpractice insurance, depending on the kind of consulting you're doing. I don't want to get too far into that because you really should consult with an insurance expert, but you would need, having insurance is crucial. And I'd like to also comment quickly when Janice talked about the difference between an employee and an independent contractor. That is crucial because if it's an employee, then you're going to need workers' compensation insurance. And if something does happen to that employee and they get injured and they go to the hospital, it'll be found out eventually that they should have been an employee, that you should have had workers' compensation insurance. And when that all unravels, not only are you going to be responsible to pay back taxes, withholding taxes, state and federal unemployment taxes, and all the penalties and everything that come along with that. Now you could be on the hook for the medical expenses of the employee. And I know of a couple of scenarios where it's just been devastating and crippled a business owner financially because they did not identify their helper as an employee and didn't have the proper insurances in place. So that is very critical. And Janice, I see there's another question for you. We are a small nonprofit, 5 years old, no paid employees, all volunteer run. We work from home with very little overhead. How much would it cost to audit the financials?
I'm actually on the board of some not-for-profits, and to get a full audit with an audit opinion, financials, and footnote disclosures, if you can get one for under $6,000, you would be lucky. The other thing would be, do you need the 990 filed? The other thing you might want to see is if it's possible to have a review done, which is not as extensive as an audit, which you might be able to have done cheaper. But when you're doing an audit, because of the amount of work that needs to be done, you are talking probably a minimum, I would say, of $6,000.
I'd like to just talk quickly. I went through some of the scenarios of opening a bookstore, the brainstorming that needs to go on, but there are other things that need to be considered. You need to, like we said, get your federal employer identification numbers, your Connecticut state tax registration numbers. You need to open the separate bank accounts and the proper insurances. If you're going to lease office space or whatnot, make sure that there's no land use issues or town hall. Those things come into play. Make sure that you have all your proper licenses and permits in place. Janice talked about keeping great accounting records. There's a lot more to it, and we do have some more questions here. Let me see. Okay, here we go. I am a sole proprietor and thought LLC would be best, but one mentor said I should get an S corporation. My work would be consulting, coaching. What is best? What extra protection does an S corp offer? And you were speaking to the business structure, so I'll let you answer that.
Yeah, I'm really not sure what your mentor was thinking about with an S corp. The S corp has some really complicating factors. It is also a pass-through entity for tax purposes. So, but I think it's got it's a more complicated entity to start and maintain. So I'm not really sure what they were thinking of. So you can set up an LLC and have it taxed as a corporation, which which gives you other flexibility for for paying for benefits for yourself and that kind of thing, which I think Janice would know more about exactly the the benefits of that. But I mean, my recommendation is typically if you want to get the benefits of filing as a corporation, then you really should just be an LLC, but just set it up so you're taxed as a corporation as opposed to taxed as an individual. The default for single member LLCs is to be taxed as an individual, just like you would be taxed as a sole proprietor. You file your taxes on as a Schedule C on your tax return. You can get an EIN, but that's really just, it's linked to your social for tax purposes. So I'm not sure, I'd be happy to talk to the mentor and see what they had in mind on that, but I don't want to really guess about that. The S Corp really is, I think, more typically for situations where you have a number of members and everybody's got, they've invested and it really looks more like a corporation, but it wants to take advantage of the pass-through, the tax benefit of the pass-through that the S Corp offers.
I see another question. Does it matter whether you change from a sole proprietor to an LLC at the beginning of a tax year? I guess that can maybe make the accounting for that 1 year a little cleaner, but the most important thing is to become an LLC to protect your personal assets, your home, your investments, your cars, your bank accounts, because if somebody were to bring a claim against the business, if you're not an LLC and you're a sole proprietor, they're coming after you personally and all of your personal assets. Getting that LLC up there is a shield that's going to protect your personal assets from creditor, or not just creditor claims, because you may have signed a guarantee, but it's going to protect you against other claims and lawsuits against the business. The other thing that's important, once you do form an LLC, you were told that you need to keep a separate bank account, and you can't commingle personal and business funds, because that will eliminate that shield, that protection of your personal assets. It won't happen. You have to, if your business needs money, you have to make an owner's contribution into the business, then let the business pay for whatever it needs. Don't pay it out of your debit card, your personal debit card, or pay it personally. And if you personally need to pay a bill and there's money in the business account and not in your personal account, take a withdrawal, take a draw, or take a salary and put that in your personal account and pay it there. If you commingle personal and business assets, you are going to lose the protection that you filed that LLC for. And then I saw another question here, Janice. I think it asked when to start making quarterly payments.
Your quarterly payments, what you would want to see is it could be based off your prior year's tax return. So quarterly payments for 2020 would be off of 2019. Or particularly if you're a business starting out and as your years are getting better and better, you would want to update your information. That's where it is very important if you have your books and records. Right now, the next quarterly payments will be due January 15th. Typically, it's, your first one would be April 15th, and then it's every 3 months. The IRS doesn't want all the money at the end of the year, which would actually be the following year. They want it as you're making it. So that is to avoid any interest and penalties. And so you would, the next time for quarterly payments would be for January 15th. So now really is a good time to start planning and seeing where you're at, so you know just how much you might need to pay.
Okay, then there's another question I think maybe for you, Janice. I started my business as a sole proprietor. Now that business is picking up. I am opening an LLC. I applied for a sales tax permit already. Is it possible to transfer my sales tax permit to the LLC so I don't lose the $100 I paid?
If you're still as far as a single member LLC, whether you open the LLC up with your social security number or an EIN number, you just want to make sure the sales tax certificate corresponds to the same number. And you would be able to transfer it. The only time is once you make your sales tax permit inactive, then you can't reinstate it. You have to apply for a new one. But as long as it's still been active, you would be able to.
I see a question here, and I'm not sure that I can answer it. I don't know if Ed can answer it. For the Management Consulting LLC run out of my home, are there any zoning issues, licensing, or permits which the town of Norwalk needed?
Well, I'll just take a stab at that. I'm not familiar with the doing business in the town of Norwalk, but every town has zoning rules and about home offices. I think unless people are coming and going from your home office, the city won't even know. And I don't think it would make a difference to them if you're just operating a business at that location from a zoning perspective. Licenses, I think, similar. But I think your best bet is to call the town of Norwalk and see what they say.
Yeah, they usually have a town planner or somebody that can help answer some of those kind of questions.
Yeah, or an economic development person. Yeah.
Yes. Yeah, you know what? Maybe start with the Chamber of Commerce and or the economic development person before you let them know what you're doing right there at Town Hall. So you can make whatever corrections are needed. State of Connecticut needs. Okay, what the state of Connecticut needs for doing a business, filing annual reports, and so on. If you're an LLC, there is a biennial tax, I guess it is, or fee that they charge, and I think it's paid every 2 years. It's $250 every 2 years. It's usually done on I forget if it's even odd year. Janice, do you know what year that is?
It's based on the year you started your business, and then it is every other year. But what they did is, if you are a pass-through entity, where if you're a partnership, a multi-member LLC, there is now a pass-through entity tax you have to pay to the state of Connecticut every year. So which actually then gets put on your personal tax return.
And I believe
And
that
Janice,
that $250 a year has been repealed.
Oh, is that repealed now?
Yeah, so it basically if you're a single member LLC, you pay, they've bumped the annual report filing fee up to $80 a year, eliminated that biennial business entity tax for single member LLCs, but they really ran up the tax on multi-member LLCs, as Janice just described.
Right, and you do have to file an annual report every year. It used to be $20. Ed's just told us that it's gone up to $80.
Yeah, and for
but then you don't have to-
corporations, it's hundreds of dollars.
Yes.
For corporations, yeah. Another reason
Right.
why you want to think twice before forming a corporation.
But in addition to the business insurance that you buy, the added protection of the LLC and protecting your business, your personal assets is invaluable.
Oh, yeah.
So don't let that scare you away from trying to be an LLC.
Yeah.
And then I'm trying to see here, another question is, I have an existing single member LLC using my home address for the LLC and for myself as agent. Can I instead use a PO box as the address for those? I sometimes rent my tech equipment. I've heard some different opinions as to whether it to include that in my LLC Schedule C or separately in Schedule E? What do you think?
Well, on the, I'll just tackle the question about putting the name in or a PO box for the LLC. If it says on the form residence address, that's what it means, residence address. And if it wants to place a business, then it wants your place of business. The PO box can be used for a mailing address only typically. If you're the agent for service or process, they need to know your residence address so I mean, the whole purpose of that is that the state marshal come and find you to serve you with suit papers or other legal documents if necessary. So that's why they need a residence. So yeah, if the form says residence, then that's what they mean. That's
And
not to
Jen-
say that people don't ignore that and put something in differently, but it might also be rejected by the Secretary of the State when they review it.
And Janice, do you know, there's the question also that this individual rents out tech equipment, and should that be reported on Schedule C or Schedule E?
If that is part of your primary business is to rent out tech equipment, then you should include it as part of your Schedule C. If that is not something that is as far as, your typical business, you would be looking more at Schedule E. This becomes more of a concern with real estate because with rental real estate, there's limitations, particularly if you have a loss, how much you can deduct. So it would look at how much of this are you really renting out? Is it your primary business or not? And being that it looks like if you're a singer, this is something completely different. So I would recommend Schedule E for that rental income.
And Janice, there's one question here. I know we're short on time. Maybe this one last question. How do we account for the EIDL and PPP, I guess on their taxes this year, they're asking?
It's basically, it depends whether you're a for-profit business or a not-for-profit. Basically what's going to happen is you're not going to be able to deduct those expenses that you use that PPP money to pay for. So if you used it to pay wages, you're not going to be able to deduct those wages. If you're not for profit, you're going to recognize it as conditional support.
And there are additional questions. Again, please, if you want, email whichever presenter you want, and we'll try to get answers to the rest of your questions.
Okay, well, thank you. That's all the time we have for questions today. And as Ron just mentioned, please, we had up the contact information of each of the presenters, and you can reach out to them directly. So thank you, Ron, Ed, and Janice. And SCORE would also like to thank the Chamber of Commerce and the Monroe Library for planning the webinar with SCORE. As a reminder, a recording of this webinar and the materials are available in a couple of days at fairfieldcounty.score.org website. So please check out our website to get that information and also to get information on upcoming webinars. On behalf of SCORE, I'd like to thank all of you for attending today's live webinar, and please fill out your evaluations that are going to be sent to you via email. And in closing, again, Ron, Janice, and Ed, thank you. And remember, for free individual counseling, go to the SCORE website and click on Request a Mentor. Thank you, everyone, and have a great day.
Thank you.
Thank you.
Thank you.